Hello everyone, welcome back. This is Jeff from Mysteel's iron ore department, here to give you the latest on China's ferrous market. Let's dive in. The ferrous market in China extended its upward momentum over the past week, supported by resilient steel demand and improving sentiment. In particular, China's steel exports remained robust, underpinned by cost advantages despite the latest customs data indicating an on-year slowdown in growth. Moreover, market sentiment saw a notable rebound, driven by both domestic and international factors. Domestically, the anti-involution policy narrative and the reconvening of the Central Urban Work Conference, which was held again after a 10-year hiatus, renewed focus on urban renewal and raised expectations of measures to help offset the ongoing decline in real estate-related steel consumption. In addition, China's stronger than expected GDP growth in H1 2025 and growing market expectations for interest rate cuts by the U.S. Federal Reserve have further boosted sentiment during this period. Total steel inventories declined despite the ongoing off-peak season, prompting speculation that downstream demand may have been underestimated. This inventory decline bolstered steel prices as a result. However, market fundamentals diverged by product sentiment. In particular, long steel fundamentals worsened as demand witnessed a sharp decline, impacted by extreme temperatures and tight financing conditions at construction sites. In contrast, flat steel fundamentals remained firm as the manufacturing sector remained supported by solid export demand. Simultaneously, heightened concerns over tariff adjustments following announcements by U.S. President Trump on a widening list of countries starting August 1st have driven both overseas buyers and Chinese sellers to expedite exports. Hot metal production witnessed a recovery this past week, primarily due to healthy profit margins at domestic steelmakers. This has strengthened raw material markets, particularly coking coal and coke, which benefited from increased seasonal electricity demand and optimism surrounding anti-involution policy expectations. As a result, the first round of coke price hikes was successfully implemented, and coke inventories edged lower. Iron ore prices also rose, with the benchmark index once again reaching the $100 threshold, despite rising portside inventories. This was largely attributed to improved market sentiment and unexpectedly firm steel demand. Looking ahead, whether the recent rally in the ferrous market can be sustained remains doubtful. Export outlook remains uncertain and clouded by potential policy headwinds, while broader macroeconomic support may already be largely priced in, which could lead to a slight correction. With China's H1 GDP growth exceeding expectations, the likelihood of further aggressive stimulus measures being unveiled at the upcoming Politburo meeting appears limited. Moreover, while the anti-involution policy may provide support over time, it is unlikely to resolve overcapacity issues in the short term. However, current high steelmaking profits are expected to keep hot metal production elevated, which will continue to support raw materials markets and contribute to price fluctuations moving forward. Thanks for tuning in to this week's China Ferrous Market Update. See you next time.